Hello and welcome to News Center. I'm Parikshit Luthra. China's National People's Congress began its annual parliamentary session yesterday. This session is anticipated to implement some crucial reforms as Beijing faces significant challenges to revive an economy battered by COVID pandemic. China has set a modest economic growth target of 5%. The country's GDP last year grew only by 3%, with the economy being clamped down by stringent COVID restrictions and weaker demand for Chinese exports. The highlight of the budget is China's spending on defense, which has been hiked by 7% to $224 billion. It is for the third time that China's official defense outlay has crossed the $200 billion mark. China's outgoing premier Li Qiang said external attempts to suppress, contain China are escalating and hence armed forces should intensify military training and preparedness. Let me take this forward by going to Jonathan Cheng, China's bureau chief for the Wall Street Journal, also Steve Cochrane, chief Asia-Pacific economist at Moody's Analytics. Thank you very much for joining us. Jonathan, give us a sense of the roadmap that the Chinese government has laid out for the year 2023 in terms of their key priorities.
In terms of economics, what they're trying to do in Beijing is really to send a message that the post-COVID era is over and that they expect things to be more or less normal. There were some expectations and some hopes, perhaps, that they might set the GDP target higher than they did at 5%. But really what they're saying here is that they do have other priorities that are not just economic that they want to deal with. There were big sort of fiscal responsibility issues, I think, that China had been trying to deal with prior to the pandemic. And I think they want to put that on track while obviously getting their economy going again, because 3 years of zero COVID was obviously quite a big toll on the average consumer, on the average citizen here in China. So I think that's the main message. And yes, there was more on the defense spending front, and that's obviously a nod to the fact that geopolitics is getting more complicated for Beijing. So you have a lot of different messages being sent out of this party Congress so far.
Right. And Jonathan, what's your sense of the defense budget and the priorities that Xi Jinping has laid out for the defense sector?
For defense, I think what we're seeing from China here is, they do have a lot of catch up. They're moving off, obviously, a much lower base than the US, which is what China now sees as its chief adversary and rival. And so it has been making a lot of progress in terms of reforming its military, in terms of military hardware. You saw it rolled out its third aircraft carrier. Obviously, it has, an environment that is arguably getting more hostile to it. You have the Taiwan situation, but you also have a border conflict with India. You have the South China Sea and the Philippines now, and this quad that the U.S. is trying to organize with India, with Japan, with Australia. And then on its northern border, of course, Russia, its neighbor, is, bogged down in this war in Ukraine. So, that's sort of the global context there. But I think, I think it's been a pretty steady increase in terms of defense spending over the last decade. And I think we're going to continue to see that just continue to rise, obviously, as China's ambitions grow.
Right. Steve Cochrane, if I can go across to you, do you think China will hit its growth targets that it's laid out in its outlook in the report which it laid out in the parliament?
Well, I think the growth outlook is fairly moderate, and with a little bit of luck, I think they can achieve it. As you know, they have put out a 5% growth target for this year. It's a little more modest than last year. Last year was 5.5%, and they only achieved about a 2.8% growth rate. So I actually thought they might try to be a little more aggressive, but given the big miss last year, I think they're trying to perhaps under promise and overperform. There's a lot of details still missing in their economic plan, but it does seem like it is a story of really all things in moderation, that they're trying to emphasize domestic demand rather than export demand as a driver of growth, a little bit of an uptick in fiscal policy. Not much in terms of monetary policy. It looks like they will hold interest rates flat. Perhaps that's to protect the currency and to avoid bringing any imported inflation. And I think the big question mark of whether they can make the target or not is whether they can stabilize the property development sector, get some liquidity back to some of the major developers in the housing market, finish some properties, and get households who have entered into pre-sales agreements into units and making mortgage payments once again. I would say that's the biggest uncertainty is the property development sector.
Right. You laid out some of those long-term economic challenges that China faces right now, including the housing sector, a shrinking working population as well. Do you think there were enough measures announced when it comes to boosting private sector investment?
Well, what's interesting is that they haven't really laid out a lot of really specific plans in terms of boosting private sector development. There's some very strong goals in place to bring down youth unemployment and an effort to hire more through state-owned enterprises. What isn't clear is how they will stimulate small and medium-sized enterprises, which is really where they need to go to create jobs and to improve productivity. And the more measures they can roll out to provide liquidity, provide bank funding for small and medium-sized enterprises, the better. But it really isn't that clear how they plan on doing it. But that's another key component of the economic plan for this year and indeed longer term, because rising productivity and improved private sector employment and private sector growth is key in this environment of a shrinking population, shrinking labor force, and so forth.
Right. Jonathan, coming back to you on the issue of managing COVID-19, the earlier zero COVID policy had been criticized widely by experts around the world because of the economic impact it had on the ground, economic impact on supply chain, movement of people across China. There was a reference to COVID-19 and how it will be managed in the days ahead. What does this say about the government's roadmap in case the COVID cases see a surge again?
Yeah, and I think they learned a lot of lessons from the last 3 years. I mean, obviously, China was the first country to face COVID and arguably the last one to let go of those measures. But there is a certain vigilance that I think is still going to remain there. I mean, I think they've been again pretty scarred by that experience in some ways, and they built a lot of their legitimacy around protecting the people, and that was their justification for keeping those zero COVID measures in place for so long. And as it was also their justification for why they argued that they needed to go all the way in the other direction. They were doing this because that was the only way that they could really defend against this Omicron, was to sort of let it happen because it was now a weaker variant, right? So there are a lot of lessons there, but I think what they want to do is they really want to restore confidence. And I think, some of the things that Steve was talking about here, I think the real X factor is whether or not they can get confidence back in the government and its ability to manage things well, the economy well, people's health well, and whether or not they can make households and make companies more confident to hire more workers, confidence for households to spend more, to buy automobiles, to splurge on dining out, on travel, on all these sorts of things, because exports were really a big engine of the pandemic playbook for China's economy, but that's pretty tapped out right now, and I think we're going to see that when we get trade data tomorrow. But they really need the consumer to step up here and for companies to hire and to invest, and that really is a question of confidence.
Right. Stephen, we've also seen how over the years the Chinese economy is very closely linked to global supply chains. There are many countries who are dependent on exports coming from China. What will be the impact of some of these policies on India's neighbours and those countries which import heavily from the Chinese?
Yeah, I think this is part of the long-term outlook for the Chinese economy that will change compared to where China has been over the last 10 years. There is already a process of some decoupling in terms of supply chains in China. I think there is a serious move towards reducing the concentration risk in China. And this goes to the confidence perhaps that investors may be losing in terms of the stability of policymaking in China. Given the experience of the last 3 years and the uncertainty with COVID, and then the quick pivot away from zero COVID, and then also uncertainty in policymaking in terms of the role of government in the tech sector, the role of government in the education sector, and certainly the property development market as well. So not that investors are going to exit from China, but what's now commonly being referred to as China Plus One, that many firms who have global supply chains will maintain a presence in China. It's a very efficient economy to operate in, but there will be an investment away from China as well in Southeast Asia. It could be in Latin America. It could be in North Africa, Eastern Europe, in terms of supplying different manufacturing home bases around the world. So this will be a bit of a drag for the economy in China longer term.
Right. Jonathan, the Wall Street Journal has also reported on China's plans to create a new regulator for data governance. Do we know more about the contours of this body that is set to be created, and what will be the implications for this?
Yeah, data security has become a big issue for China over the last couple of years. I mean, not just for China, it's become a global concern for a lot of governments around the world, because you have a lot of tech companies that are just sucking up massive amounts of data. And of course, that data is powerful. You can organize it and you can really use it to learn a lot about your own people or about an adversary's people. And so we saw this with Didi, this ride-hailing company that went public in the US, and there were concerns about what was happening with that data. And so I think that really was sort of the beginnings of this concern in Beijing. And now here we are in 2023, and our reporting tells us that we are going to get some details of this introduced during this legislative session. I don't know that we're going to know exactly what the timeline is and what the parameters are, but clearly this is a top priority, and it's linked to the economy and harnessing this data. But of course, I think at heart it's a national security concern, and it's really just ensuring that data that both Western and Chinese companies are collecting about users in China, what happens to that data? Is it flowing outside the country? And if so, under what circumstances and to whom, and all the rest of it. So I think you're going to start to see a lot of countries start to treat their citizens' data as, not only a natural resource, but as a national security concern as well.
All right, Jonathan Cheng, Stephen Cochrane, thank you very much for joining us here on CNBC-TV18, telling us about China's growth plans and their implications for the world economy as well. We're heading into a break, but up next, we focus on India's EV sector. Subsidies of nearly 12 electric vehicle companies remain suspended on allegations of flouting the localization and phased manufacturing program criteria under the FAME scheme. A special discussion with Sohinder Singh Gill, the CEO of Hero Electric and the Director General of Society of Manufacturers of Electric Vehicles. Don't go anywhere. We'll be right back.